can't get over the fact that Ratan Tata is no more. I mean, what a stalwart and what a giant, really.
Yeah, we all will miss him, but like they say, the legend lives on, and that is what it is. I mean, the true spirit of the Tatas and the true, the true, if I may say so, the entire grandeur of what his life was, what he achieved, what he created, and he'll continue to inspire millions and millions and generations to come.
Truly no one like him. Okay.
But we start a fresh day,
Yeah.
we start a new day, and this is the last trading day of the week. If one really looks at the week for me, in terms of the market setup, frankly has been far more satisfactory than what we anticipated on Monday morning. We were dealing with twin problems on Monday morning, which is that which way China would move and what will happen to crude and crisis in the Middle East. Those concerns frankly have gone on a back burner. The template of the market is also such that market has stopped falling. We may not be in for a V-shaped rally or a recovery, unlike the deep cuts what we've seen, let's say, in and around election, post-budget, when the yen carry trade reversed. So the difference between the earlier sharp falls in this year versus now is that markets have not rallied back. But the difference in terms of a market pattern is that markets have stopped falling. So we may not be rising, but we have certainly stopped falling.
Yeah, absolutely. That seems to be the case. But, lots really to talk about in terms of the global cues this morning. Take a look at US futures. They've definitely managed to edge up, although the overnight move was quiet, but with a very, very marginal negative bias. US inflation rate, of course, has lowered less than expected. And, inflation really seems to be that one niggling worry for central banks across the world. And US, of course, no different. Having said that, there's lots that happened in terms of, the other data points that the markets would monitor. Take a look at what's happening with the Japanese markets. They've climbed up to a 2-week high after that little bit of volatility that transpired last week. You've got ECB, which continues to cut rates, but, pretty cautious on the next move. That's what their commentary has been. The US initial jobless claims, they've managed to soar to a 14-month high. But look at the volatility in something like oil, for instance. That's jumped up by 3.5%. Of course, there's a big storm in the US in the Florida region. And of course, the geopolitical tensions, which continue to weigh heavy on, the oil prices. The 10-year yield in the US, that's also risen to a 2-month high. So, it's an unsettled world, which is sort of trying to find that equilibrium, I guess.
So, Aisha, for me, the starting point for everything is when we saw an uptick in geopolitical tensions, especially when there was stir in Middle East. Now, let's go back to that data and look at where we stand and how India has done, and within India, how the individual components have moved, which is large cap versus small cap versus mid cap. Now, this is market for you. Now, this is how Nifty has moved, but can we start with the world, please? We'll get into Nifty gainers really later on, because that is not what we want to establish right at the beginning of a trend which we're trying to establish. We look at that data. Is that data getting ready? Okay, the data is not ready. But the point I'm trying to just, ensure and, perhaps bring out here is that from 22nd of September, the world is not a bad place, both in terms of the levels and also in terms of the action and the reaction. So things are looking calm, things are looking settled. There is no panic in the world. There is nothing which really could be called as a very large headwind. So we may stop falling, which it appears if one looks at the global setup. FI selling is there, but it is not scary, which is getting counterbalanced by DI buying. The markets have now moved from what could be called as technicals and flows to earnings now. The month of October would be very different from the month of September, because it's all about news, it's all about data. And I think next couple of weeks now, it may not be about global cues. It may not really be about technical so much, so to speak, but it really will be about earnings, individual reaction, management commentary, update from the festival season. But the good thing for me is the fact that markets have stopped falling. The volatility will not get crushed. You will have to live with volatility. But when you stop falling, then you may move into what could be called as sideways price action or time-wise price correction.
Yeah, and that's what we witnessed in trade yesterday, at least a sideways move for the frontline index. And you did have the broader markets actually underperforming in trade yesterday. And it was IT that did come under a bit of a cloud. And that's largely on the back of the weak set of earnings by TCS. So pharma as well lagged, but it was the banks that did manage to outperform. And yeah, there's that data up for you on your screens where the rest of the globe stands since the 27th of September and where we stand as well. That's the picture in terms of trade yesterday, but I guess that disconcerting factor, Nikunj, is that we continue to see that FII net sell figure that only continues the highest FII sell figure after June 22, and the net short addition for the 8th straight session for FIIs in index futures.
See, this is something which was entirely unexpected and it was not anticipated, which is that this rampant selling by foreign institutional investors. And not only they are selling in the cash market, they are also adding to short positions. So one really looks at the long position of FI. The long position of FI is at a multi-month low, and similarly the retail long is at a multi-month high. The point I want to just establish here is, I think this is a beautiful graphic, which is that FI shorts have gone up by 90% and the retail longs have gone FI shorts have gone up by 90% and retail longs have gone up by 200%. So there is a huge divergence in the way how the market activity is. Now, what could happen next? Looking at the flows, the fact that globally concerns are not there, I don't think the domestic flow or the retail appetite is going to go away in a hurry. Considering that China is no longer moving higher, you are getting some kind of a sense in which way the commodity prices would move. I would also make a case that sooner than later FI selling would stall. So you could actually see maybe next week, maybe after that, a case where FI long positions or FI short positions could be reversed. So for me, that's one factor which one really needs to analyze, because FIs have been selling for technical factors. They've been selling because of money was rotating into China. They've been selling because Indian valuations were high. But now selectively, I think we are reaching that point where, because retail flows are strong, because the world is getting settled, because China is reversing, because the bond yield is nearing 4%, you may actually see a reversal in that data. So the next trigger for the market really could come from not FI long buying, but FI short covering.
Right. Other than that, there's of course TCS earnings as well, and let us just walk you through what the key highlights have been, because one is expecting some downgrades perhaps to come in for TCS in particular, also given the kind of market positioning that the entire IT sector, and TCS included, has had in the last year or so. Client-specific issues, they're likely to impact the revenue. UK, Europe, both the business have been muted. India, of course, has managed to lead the growth, and they are targeting about 26% exit margins as well. Mega deals are a miss. Attrition is on the uptick. So wondering if that IT rally is going to stall, and TCS surely is going to rub off perhaps on the rest of the IT pack too.
See, Aisha, especially after the last quarterly numbers, the general view was that the IT turn had started, which is that they had stopped the business cycle contraction was behind us, and now the business cycle was on some kind of a trajectory where markets were anticipating that with each passing quarter, the Indian IT companies would move from strength to strength. Unfortunately, that has not translated into reality. Now, TCS in a sense has been a harbinger of market leadership, both in terms of first company which talked about the IT curve bottoming out, and also the first company which saw a drop in attrition numbers. If I look at the numbers, both, I mean, there is no relative comparison right now because TCS, as always, is the first one your first one off the block. But if one really looks at the comparison here, numbers do not really they will not impress, and they do not and earnings upgrade are unlikely to happen, which means that the bias for IT is going to be flat with negative. Now TCS in a sense had raised the hope same time when in the last quarter when they were the first one to really call out that things were looking better. So incrementally things are looking better, but it is not keeping in pace with what the market expectation was, and now I think it is getting more and more clear that the path of recovery is not going to be V-shaped recovery, it's going to be a gradual one. So if you thought, like we say that, it's going to be a recovery more on the lines of tortoise, not on the pace of rabbit, market somehow thought that it's going to be in V-shaped recovery, which does not hold true according to me.
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits. And then break right through them. Become something more. It's my time to rise.